Hey guys, Sean here at KT Trades. Today I'm going to be showing you guys one of the very first strategies that I learned when I first started trading forex. I've been trading this strategy for over 2 years now, and it still works till today. So if you haven't found a consistently profitable strategy, I definitely recommend you take a look at this strategy and learn it. So let's get started, guys. Alright, so I'm going to call this strategy moving average breakout strategy. For this strategy, you're going to need three indicators. One, you're going to need the moving average indicator. Two, you're going to need the Ichimoku indicator. And three, the high-low indicator. Alright. And the strategy works on all time frames, so you can use it on the 15-minute, 30-minute, 1 hour, 2 hour, 4 hour, whichever you'd like to use. But I like to use it on the 1 hour, so I'll be showing you guys how it works on the 1 hour and on the 50-day moving average. So first, let's set up the indicators. First indicator we need is the moving average. So we'll pick the moving average from here. We're going to set it up to the 50 period. And then I'm going to color the moving average blue, and I'm going to make it a little thicker so I can see it. And then for the next indicator, we're going to need the Ichimoku indicator, Ichimoku cloud. And for this indicator, I'm going to leave everything default, but for the style, I'm going to take off the conversion line, baseline, and lagging span. We don't really need that. I'm just going to be using the cloud to determine the trend and to look at the market from a bird's eye view to see how it's been moving. Lastly, we're going to need the high-low indicator. So high-low, and we're going to leave that at default. The high-low indicator is just going to be showing us where the most recent highs and lows are. So that'll help us determine where the stop loss and profit target should be located. Alright guys, so let's run the strategy at a random time so I can show you guys how well the strategy works at basically any time. So let's just start from April. So the beginning of April. Let's run the replay from April. Well, let's go from here. Alright guys. So the way that the strategy works is we're going to make an entry in the direction of the trend, and when price moves across the 50 moving average and closes on that side. So if you guys don't know how the Ichimoku works, basically for the Ichimoku cloud, if the price is above the cloud, it's generally trending up, as you can tell here. So let me show you how it looks. So if you're looking from here, I mean, it's clearly trending up. So when the price is above the Ichimoku and it's trending up, if the price is below the Ichimoku, then it is trending down. You see over here. So I mean, it makes it super easy to look at. So here it's trending up, over here it's trending down. So I mean, it's pretty obvious. It's trending down, and over here it's trending up. It's above the cloud. So that's just to determine the trend, and it gives you a bird's eye view, so it's a lot easier to see, and you don't have to actually draw trend lines. So I'm going to delete this, I'm going to delete this, and then let's start running the strategy. So since the price is below the cloud, we're only looking for sell positions here because the market's trending down. I don't like going against the trend because I mean, you can't control the market. The market makers control the market, and you're playing their game, so you need to stay in your lane, and you don't want to get in their way. You're getting messed up. So let's follow this. We're looking for, so right now price, okay, so price was above the 50 here. You wanted to close below, but we're not taking this candle because this is a huge candle. This is a very unusual move. It's a 100 pip move in 1 hour. Usually when this happens, there's usually some type of retracement pullback, and price will probably retrace a little farther back, and then it'll come back down. But we don't want to take that risk because we like to take calculated risks, and we like to take very high probability trades. So we're just going to ignore that. And then let's keep going. What we're looking for now, we're looking for price to pull back above the 50-day moving average, and then we're going to try to catch the momentum swing back down. So right now it's still below. We're getting closer, so I'll slow it down a little bit. Getting a little closer. Also, if price is inside the cloud, that usually means that price is indecisive and it's in consolidation. So you don't want to take trades while it's inside the cloud, because these cloud outlines act as support and resistance. So once it's in the cloud, it's usually going to be stuck in there until it breaks out. So although price is above the moving average here, and right here it closes below, we wouldn't take this trade because price is inside the cloud. So if it's inside the cloud, it's in consolidation. You're not sure. It could break out upwards, it could break out downwards. So we don't want to take that risk. So we'll wait for it to cross below the 50 and below the cloud for a trend continuation downwards. There we go. So see this candle closed below the 50, and it also closed outside the cloud. So this is demonstrating that a breakout downwards is going to happen soon. It's basically demonstrating that it's a trend continuation downwards. So let me see this arrow. So this price went up here, and as it went up, it basically deflected off the 50-day moving average, and now I'm predicting that it's going to shoot down. So I'm going to put in a sell order here. So let's see. So here we are going to put a short position on the next candle, and then we are going to place the stop loss at, sometimes I like to place it at the 50-day, but this is way too close. It's only 2 pips, so it's way too close, and we might just get stopped out as soon as we enter. So I would either put it at the open of the previous candle, but it's only 6 pips, so this is also too close. I go a little farther back. It's the previous swing high. This is 11 pips. 20 pips. This is perfect. So I'm gonna round it to 20. So we're doing a 1-to-1 risk to reward ratio, 20-20. We have our stop loss is 20 pips away, and our profit target is 20 pips away. So right now, I am predicting that if the strategy works, price is going to swing down. And let's see what happens here. Oh, went down a little bit. But it's a little indecisive. Okay, it's bouncing around, bouncing around. Oh, there we go, winner. So if you took this trade, you would have won 20 pips. So we made a plus 20 pip gain. On this trade. If you are trading a standard lot, 1 standard lot equals $10 per pip. So we made a 20 pip gain on that, and 20 times $10 equals $200. So if you took that trade, you would have made a $200 profit on it. Winner. So there's one trade. Let's look for the next one. Let's keep going. So now we're waiting for price to close above the 50 again, and then we're going to take it for another ride down. Let's give it some time. Speed up a little bit. Alright, it's above it now. So now we're waiting for price to close below the 50 and close outside of the cloud for another trend continuation downwards. It's almost there. Yeah, see, it's not yet. It has to close below the 50. There we go. So close below the 50. The previous swing high is up there. Let's see how far that is. We're going to enter here on the next candle. So usually, like I said before, I like to put it at the 50 moving average, but this is kind of too close. It's only 8 pips, so I'll move it back a little farther, and I'll probably put it right there where the previous candle opened. So I'm gonna round it up to 15, and then now I am anticipating it to go down again because it's a trend continuation. So let's move it next. Almost there. Boom, winner. So we won 15 pips on this. So going back to our last winning analysis, it's another winner. We made a plus 15 pip gain. And if we're doing one standard lot equals $10 per pip. And then we won 15 pips there, so that times $10 equals $150 profit on that trade. And we made that in about, so each candle is an hour, so we entered on this, we made it in about an hour. Less than 2 hours, but about an hour. So I mean, yeah, I made 150 bucks in about an hour. It's not bad. Let's go to the next one. Let's keep going. All right, waiting for price to pull back up. It's getting closer. All right, it might be somewhere nearby. So now price is above the cloud, so now it's trending up. So now we'll look for buy orders. We'll look for price to close below the 50, and then we'll try to catch it on its way back up for trend continuation. It's coming back down, it's going back up, it's coming back down, it's going back up. Let's see where it goes. So close below, and then now it's trending below. See, the problem with this is that it crossed very soon, like it didn't establish a trend at all. So at this point, I probably would avoid taking any trades because I mean, price is indecisive. It didn't switch to a trend up, and it looks like it might be coming back to a trend down, but we're not sure if this is going to be trending down or if it's going to swing back up. So at this point, I'll be moving through, but I'm probably not going to take any trades because you don't want to take trades when the price is indecisive, because you want to go with the trend. You just want to go where the price is going. You can't control price. You're not a market maker. So at this point, you probably want to take it easy and just watch it and see where it goes. See, because if we took this trade, we probably would have lost this. So it looks like it's coming back up. So good thing we didn't take that trade. See, now price is inside the price is stuck inside the cloud, so now it's indecisive. These act as support and resistance. As you can see here, price pulls up, pulls down, bounces off the cloud, bounces up. It's probably going to bounce off this too. It's going to keep bouncing until it breaks out. So you probably don't want to take any trades at this time. Yeah, you see how these wicks are super long. They keep trying to test it. They're trying to break out, but they're not being let out. So you might just want to wait on that. So this is too risky here. All these wicks, super indecisive. I want it to be smooth, like how these are moving over here. There we go. Looks like price may have swung up. So it looks like the trend's swung up now. And now the price is trending up. So now, let's go back. So we would have entered right here, because now we know the price is trending up. Price is closed below the 50, and then now it's crossed above and it's closed above it. So now we are going to take a long position on the next candle. And our stop loss is going to be placed, let's see, can't place it on the 50 because it's literally where the entry is. The top of the cloud is only 5 pips. That's like way too close, so I'm not going to take that. I'm going to put it from the second cloud. So I'm going to round that to 16 pips. And then now I'm anticipating price to swing up. So let's see if this works. Next one, next one, next one, almost. Oh, retraced a little bit. Let's go back. There we go, winner. So again, let's calculate our wins. Well, this was 16 pips. So winner made a plus 16 pip gain. For doing a standard lot, one standard lot equals $10 per pip. So we made 16 pips here times $10 equals a $160 profit. So we made that profit in about, let's see, 1, 2, 3, 4, 5, 6, in about 6 hours. It's not bad. So that's a basic explanation on how the strategy works. I mean, as you can tell, the 3 entries that we saw from March 25 until April 10th, it's about what, like 15 days? Like 15, like we had no losses. They're just straight wins. I mean, you guys can keep running it, but I'm sure you guys get the basic gist of this. I hope this helps. If you guys have any other questions, feel free to message me on Instagram. Our Instagram is K2Trades, or you can email me at info@k2trades.com. And I hope this helps. So if you guys haven't found a profitable strategy yet, I mean, I showed you here clearly it works, and it's super simple. So yeah, if you guys have any questions, feel free to hit me up. I'm here to help. Until next time, guys.